Hi everybody, Abdullah Musin, welcome. I'm glad you enjoy our videos. Hi Patrick, Craig, FX Glenn, Sandeep, all my trading warrior brothers and sisters. How's everyone doing today? I have Andrew Kramer with us today as a guest. His Twitter handle's at Alganal. Hello Kenrad, Morrow, everyone. Reef, how are you? Okay, so just quickly, the yen, we've been talking about a rising wedge. I considered it a pretty good turnaround Tuesday prospect. Steve had the rising wedge, so he warned about this happening, and then Blake talked about it yesterday as well. You know, it is turnaround Tuesday when he was showing some of the yen crosses. So that was in here. Even if you did it Monday, you were okay. So what to do from here, I have no idea. I thought we were just going to go to the 200 right here on the 1 hour. And so we've already exceeded that by about 30 pips or better. So let's see what Yellen has to say in the next couple days. I'm not sure if this breaks a long-term bullish bias on it. Maybe on a 4 hour, we're near something. Yeah. Anyway, if you're still short, you're certainly not going to get hurt going to the door on 50% of it, right? So from a money management standpoint, should be close to 100 pips. Take half, move your stop to BE. All the heat is off. That's pressureless, free trade. Worst case scenario is you make money. So, you know, all of our trades should be worst case scenario, we make money. Correct? All right, so the guppy was something else. Steve stayed short. I asked him about it yesterday, even though we had this minor high. To me, it was a stop hunt. During the show yesterday, we were here on this candle. Another good trade. What's interesting is I talked about the 2-week off number. All right, and that could have been a first target for booking it, booking partials. You know, I'm a big believer in partials, in and out. And it just melted through it. The 2-week off number was 46.38. Okay, but what's interesting, and you know, off numbers could come into play more than once during the week. So here's an example. It blew right through this 46.38. You see, it tried to respect it for a while, and we broke down. But take a look at what today's high is on this blue candle. 46.30. Okay, so now it's starting to play with it. I'd actually like to see in the next few days some type of ABC back to 6.5 to 7 to lay into it again. Martin, all you do is you count back 2 closes on the weekly starting from this week and look at the close, and that's the off number. Got it? Okay, so let's see who's in the house here. Hi, Blake.
What's up, Dale? I'm in the house.
Okay, bro.
Hey,
so,
I was going to just tweet something really quick. I was going to tweet about
DJ Blake.
About this webinar. Hey, hold on. Hey, Steve. Hold on.
Good morning, mate.
Hi, Stevie.
Talk to Steve for a second.
So, Steve, you do anything? You take something in on this move in front of Yellen? Partial profits on guppy or anything? You're just going to ride it?
I'm thinking of taking some. I'm thinking of taking some here. We will see what happens with the rest.
Would you lean into it up there? I'm showing my screen up around 6.5 to 7. Maybe look for some kind of maybe we'll get an ABC here in the next couple days.
That's what I want to say. The thing is that at minimum I would expect an ABC.
Okay.
So, you know, I'm not really pressured to take any profits because I believe that you know, the chance of not seeing at least one move lower from here is near zero in my mind. I mean, I really expect that the USD yen correction is going to at least be an ABC. and the same should apply to those. So I was telling yesterday, Blake, that my first target in pound yen is 144.70 because I have a zone there. So most probably I'm going to wait for that to take half off. My entry was at 146.68, if I remember well. I said it yesterday, the exact number, and I think, you know, it's 200 pips to there. That's going to be, you know, a nice place to take half off. And then, you know, I see I will have a free option in essence, because, you know, that will be able to finance my stop loss even above the highs. So we'll see. But for the time being, as you understand, these key reversals that we're seeing since yesterday are obviously, you know, a good sign that we were looking at the proper timing for a market turn here. So, you know, I'm quite confident now. I mean, you know, this is one of the best positions you can be into.
When's the last time you saw the yen like down 100 pips? The new correlation is yen down 100, S&P up 10 handles. What do you think of that correlation? The risk-off correlation. What do you think?
I'll tell you. I think we've said I think we've said that before. I think the fact that we see correlations going nuts.
They're great. They're not. Yeah, it's.
Hey, is an indication.
Yeah.
Hey, Blake.
Hey guys, sorry. Hey, you know, I've got the office yammering at me in one ear, but I got to talk about a couple of things that just happened. So this is really
go ahead.
Big stuff. And so let's talk about first of all, Janet Yellen and her prepared speech that we just got basically has and let me grab the charts here. So basically what Janet Yellen is telling us is rates aren't going to go higher. They're going to try to shrink the balance sheet, which is inflationary. Okay, which means that if you wonder why gold went up, like if you look at gold and silver, if you wonder why those powered higher, well, that's because this was not what the market was expecting. The market was expecting more of the comments in line with what Brainerd said yesterday, which is seen as, you know, her confidant, if you will, or her maybe even her mouthpiece, if you will. And so when today's statement really caught the market off guard. So what happened is you're seeing this rally in, like, here's silver, okay, and now silver's come off a little bit, obviously ahead of her actual testimony, but here's gold rallied. And you're getting a big move now in these commodity currencies. So take a look at like the Aussie. Now the Aussie, we all know that the Aussie's up against huge resistance. I mean, I don't think I have to, you know, tell anybody how big this resistance is. We've had this drawn up here for God ever since we were, you know, I want to say sometime last year we were looking at the 77.80 level right here, and this has continued over the last year to be massive resistance. Now I'm not saying that this is going to break right now, but what I am saying is that that because of the tone that Janet Yellen has taken, there is now a good chance that this could happen. So with that being said, the currency pair that I'm really focused on right now, is I just tweeted it out, is I'm focused on the Euro Aussie, because the Euro, we all know, broke above 114, what did we break above? 114.50 yesterday. Now we're back below it, right?
Yeah, get lower high.
Lower high.
Aussie. Yeah.
Well, wait. So the euro dollar broke above 114.50 yesterday, almost touched 115 overnight. I figured there was going to be a potential false breakout, but now that this is out, and now people are going, okay, well, if inflation is going to rise globally, because that's the play right now. You think about what's in play, inflation. Okay, if inflation is going to start to rise as everybody is tightening their balance sheets, everybody is tightening monetary policy, excuse me, bringing down their balance sheets, that inflationary information or wave that we'll probably get in the coming months is going to favor the Aussie dollar, the Kiwi dollar, these, you know, even some of the emerging market currencies are going to do better. I mean, you got the Turkish lira, the Mexican peso that broke into new trend lows today, which, you know, I'm upset about because it stopped me out. But you know, I can't focus on just one trade. I got to focus on other stuff. Right now, and yes, I do take losses. So just so everybody is aware that I don't make money on every trade. But right now, what I'm focused on is this Euro Aussie. So if you take a look at the Euro Aussie in particular, what I can point out on this particular chart that we're looking at is defined risk. There is defined risk, and that as a trader, that's the only thing that we can ask for. Defined risk. Where is the defined risk? It's right here, right? Like you see where this highlighter is? It's right here. Okay, it's at 152, 152.50. We're at 149. That's 250, 300 pips depending on how you're going to play it. But what's your reward here? Well, the reward, let's just say it's back down to the 200-day moving average. That's 144. So you're risking 250 pips to make 500. If it drops down towards trend lows, you know, down towards 140, let's say the Aussie actually breaks out, which I don't know if it's going to break out, but if it does, maybe we trade down below 140, below the 200-day moving average. Now you've got a situation where you've got a, you know, 1 to 2, maybe 1 to 3 risk-reward ratio. And what really, to me, what's going to really solidify this trade, because I already shorted it just a little while ago, just like, you know, 20, 25 pips ago, is a break below that trend line, and that's when I start adding. That's when I start getting a little bit more aggressive, because then I know that I'm on the right side here. So if inflation is what is coming down the pipe, which seems to be the case at this stage in the game, then that should weigh on the Euro Aussie. Now, you know, a lot of people are going, well, why are stocks moving higher? Well, stocks are moving higher right now. Like if you take a look at the S&P, you know, the S&P is breaking higher. We had a nice candle yesterday anyway. We're breaking higher because people are like, okay, well, you know, Janet Yellen's not going to raise rates. But if she's not going to raise rates, I get that. But is this going to be, is an inflationary environment going to be good for equities? And I don't think it will be. I think the stock market's initial reaction right now is, oh, let's buy because, you know, Janet Yellen is maybe not going to raise rates aggressively from here, meaning the cycle's probably done. So now she's going to focus more on the balance sheet. Great. But she's still pulling liquidity out of the market, and in what could potentially be an inflationary environment. So what I would think is that we are approaching, you know, you probably want to look at this as an opportunity to sell into strength on some of these moves in equities. So just a couple of things that, like I said, I'm focused on. Man, this Euro Aussie is just breaking down. I think everybody just shorted it on this webinar because it just sliced another 30 pips just moments. We were talking about it. So.
The initial move was totally my fault, Blake.
Was that you? Did you fat finger it?
No, the truth is that you know, like a couple of hours ago, I exited all my crosses positions. Some of them with a profit, like the Euro Kiwi, the Pound Kiwi, and Euro Aussie was with just a little profit, and I lost some on the Pound Aussie because I also got stopped out as you in the USDMXN. But on the other hand, I have to say that I do see still a descending wedge in the USDMXN, which I redrew. So I might have another stab at USDMXN a little bit lower. and I did also take some profits in the USD TRY, which is which is still in profit, because I totally agree with you. I mean, these trades seem to be breaking down, and the least to say they need to be monitored, because plenty of them hit some initial targets and they reversed. And usually when you're looking for a reversal, but the first strong resistances that you have in mind produce so strong reactions, you start considering that probably you just timed right a correction higher and not the reversal. You know what I mean?
Yeah. It's I think and speaking of which, like you talked about some of these crosses. If you look at like the pound, like here's the pound New Zealand, this thing's probably going to start breaking down as well. Pound Aussie, and people go, well, how about if it's risk off? The correlations that we are familiar with is in a different environment. It's like, okay, stock market goes up, these go down, stock market goes down, do these move higher again? I don't know if the stock market is moving down because of higher inflation and tightening monetary policy globally. Maybe we get a different reaction this time around. So your correlations right now are not, I don't think you should really rely on those per se. Look at the Euro New Zealand just got walloped too. And this Euro Aussie is so ugly. That was a nice little hanging man yesterday. So, I mean, these are obviously some pretty big moves that we're seeing here. And I think we got to be very, very careful with, like I said, think about if inflation is going to go higher, what are the beneficiaries? And my opinion is, some of the beneficiaries is going to be, is going to be the Aussie, the Kiwi, the Canadian, and people that I've been chatting with this morning is like, well, the Canadian's holding up so well. I'm like, I understand that and I get that, but that we have the Bank of Canada here in about 45 minutes. If the BOC really says, hey, we're raising rates today, which they are expected to, but they are looking to continue to raise rates, this dollar Canadian is probably going to see 125. Not necessarily right now, but it could see it in the coming weeks, because remember, the market is still aggressively short the Canadian, lopsidedly. So when you look at like the Canadian, let me pull it up really quick. I know that the propensity right now is, oh, I want to buy this dip because it's cheap, and RSI is oversold, it should bounce here. But again, if the BOC is out and they're like, no, we're raising rates, and this is like the first of many, and it seems that way. We walk away with that type of impression today. Then what's going to happen is you're going to get a market that really starts to come under pressure, and we could, like I said, we could see these trend lows again down here. I don't think this is impossible. Now, we would be obviously very oversold on our way down there, but I think that those are possibilities. So I think we all need to think about that, in the event that, yes.
But by the way, we also see major, because I keep, monitoring them. We were looking for a new high in the USD ruble. We did get that. But today we see a big reversal there, and an even bigger reversal. I know many people don't monitor those, but I'm saying it because it enhances your argument. We have a huge reversal in USD ZAR as well. Huge. It's almost 2% down already today.
Oh my God, that's a big move for the rand. And yeah, I don't know if I have the rand up here. I don't. Let's see. Oh my God, yeah, that's ugly. And it was coming out of a wedge too. Well, it looked like it was coming out of a wedge, and it's reversed quite aggressively. So, this is just it's a very, what could be a very interesting. I want to see how today plays out. Obviously, I want to see how equities do. I think precious metals are the play right now. I think gold's going up to at least channel resistance, which is it's only about 5 points away from here. But if you look at gold, okay, here's gold. We had some really nice hammers the last couple of days, by the way, guys. If you guys didn't see, but gold's coming up towards this resistance. We cracked this 1230. Gold is gone. I mean, when I say gone, it's probably going to be trading at 1250.
That's exactly what we wrote. I showed it yesterday to people that we made a very nice blog post about silver and gold, and that was the level we were talking about in the blog post as well, the 1230, and you know, for silver it's $16. We need to see the metal establish above $16 once again. You know, if we want to.
Do you know what I love most about gold? I'm sorry, Steve. Do you want to know the thing I love most about it? I love the fact when everybody's short, we had a false breakdown right here. Now remember, we did have a false breakout over here too, but this is a double top, false breakdown, and reversal. So what happens here if we just rip above the 200-day moving average, which comes in right around 1230? I mean, we're going to squeeze up towards 1250 really quickly, and that, I think, again, it plays into what we're talking about. You know, it plays into the whole idea that you know, perhaps we are in an inflationary environment, and gold, you know, would be a beneficiary in that type of situation. So, are you guys still there?
Yeah, yeah, huge reversal in euro yen as well. Huge. We were talking about it yesterday as well, but this is huge.
Yeah, that's a big one. That is a big one. And all these yen pairs, I'm still short I shorted the pound yen, by the way, yesterday, personally. And I mean, this thing, we've got a flag completion coming in. As our ForexAnalytix traders, just so you guys know, this is you know, last night, you know, on the hourly, you know, we pointed out the pennant flag formation. 4-hour chart, we mapped it out before it broke down and then after it broke down. Okay, so you've been well aware of the pound yen moves since the breakdown yesterday at 147, and here we are at 145.50. I think we're going to see 145. So and you know, a couple traders that I know that are ForexAnalytix subscribers are short. They're like, man, my target's almost getting hit. You know, thing is if equities come under pressure, this yen could rip even further. I mean, you know, I look at this pound yen, and yeah, we could see 145, but we could really, you know, come back and see like 144, which is a retest of this trend line. So especially if gold goes up, you know, gold goes up, yen continues to strengthen, and it could be a pretty massive move. So yeah, I think all these yen pairs are showing pretty big reversals too. I mean, the Aussie yen and New Zealand yen are going to act a little bit better. Here, let me go over to the dailies. They're going to act a little bit better in this inflationary environment, but that doesn't mean that they won't come down, you know, because if equities come down, they will. Canadian yen's coming under some pressure too, but that we have to wait for the Bank of Canada here. But euro yen and pound yen, you're right, massive reversals. And I know we yesterday tweeted about the ABCD, and Nick has been on this like, you know, flies on poop. You know, she's been like all over this chart, and maybe I didn't have to use that analogy, but you know what I'm saying. She's maybe like peanut butter on celery, peanut butter on jelly. I don't know. Anyway, but this was a clean ABCD move from here. So it's been a great reversal thus far. I played it short yesterday on the euro yen. I closed it last night because the euro was in breakout territory, and I was like, you know, I could have obviously stayed with it, but I stayed with the pound yen instead. So anyway,
pound yen was a cleaner chart, Blake. I think you did the right thing. I mean, I prefer to be short that one as well, instead of euro yen. Although I'm shorting any rebound in euro yen now that I got the confirmation there as well. Any rebound, no questions asked.
Yeah, I don't think that's a bad idea. Anyway, I got to turn it over to you. I got to get here for the open. Good luck during the Yellen testimony, you guys. Steve, I'm going to pass it over to you. And
sure, because we have a lot of things to show. I mean, this is a very interesting day. I also see that the webinar's attendance is increased. Obviously, people see, the big moves, and they realize, that this is the time to reassess some of the things. And as we've said plenty of times, you should always be flexible in the markets. You should always be flexible. I mean, you have an initial thesis, but the market can shake off that thesis. You should not be stubborn with your trades or with the market. So when you start getting the feeling that something is not working out properly, just bail out. I mean, just bail out. If that means taking some losses, fine. If that means taking less profits than you had in mind, fine as well. I mean, in this case, you're even lucky. I mean, we started seeing, Blake talked about them, so I'm going to start fast about them. You remember that we were seeing, for example, Euro Aussie, and I said that I had a target that was here.
Steve, I'm sorry. Hey, really quick. Hey, guys, I just want to tell you, listen, Steve is my right-hand man when it comes to analysis on ForexAnalytix. Him and I see charts almost exactly the same way, and that's why when him and I, we share the duties at ForexAnalytix of doing analysis on basic technical analysis and candlestick analysis mostly, because he is that talented. So make sure you guys stick around and listen to Steve, because his viewpoints are exactly what I would be saying. Okay, with that being said, I got to go. See you guys.
Thanks, Mike.
All right.
We were monitoring this level for Euro Aussie, and I remember a friend asked here, what happens now, because we had that reversal candle, and I drew this and I said that, listen, in my opinion, this thing is not over yet, so it should yield at least one more high, and we have this zone. And then what happens when we get this zone? We get an initial rejection of it. Fine. I mean, that doesn't mean much. We got that here as well, but look at what happens today. So such a move, and from such a zone, okay, wrap it up, take up your profits, just leave. Euro Kiwi, same thing. We're monitoring at this zone. Yeah, we penetrated above it, but still now I see the potential of a three-way move, like A, B, C. So seeing these big reversals is like, fine, okay, bail out of here. Okay, you might have hoped for new highs, which we did, but that doesn't mean it's happening. Pound Aussie, actually, this is the one I had to take a loss when it hit the head and shoulders, and this zone, boom, that's it. It fell lower. Now, Pound Kiwi is still holding up. I have to admit that, and it's still holding up above this zone. But listen, when you see setups and you decide to take profits and a loss on the other three, are you going to stick with it? No, I'm not. So I still see the potential, technically speaking, for at least one more high here. But to be honest, since I'm bailing out all those crosses at the moment, and I'm lucky to do it on average taking profit, I'm just, doing it, and even if I'm wrong and even if they move higher, I won't be able to complain about it. On the other hand, since, I'm often talking about my positions, today I established a new position, and that had to do with Euro NOK. You remember that we had been monitoring this for some time, and I said that once we penetrate below this, and we close below this, I'm interested to be short. So now I'm short Euro NOK. I remain short Euro CAD because I'm comfortable in the profit. I see some consolidation here, but as long as it doesn't break higher, I'm going to stick with it. And anyhow, this is on the opposite direction of the others. So if I want to be short those or not long anymore those crosses, I mean, it makes even more sense to stick with my short EuroCAD. So I'm still short from the break of the wedge, and quite comfortable here. USD NOK, I remain short, and I actually now see, you remember we saw it a few days ago, and I said that what I'm expecting to see now after we broke below here is that we got a retest here, and I said that I'm expecting to see an acceleration lower to feel comfortable about it. So that's what we're getting here, and I really think that we should head to at least an A, B, C. The quality target is at 815, just a little bit above it at 817. We have that low. So to be perfectly honest, I will most probably take some profits. If it doesn't reverse higher, of course, I'm going to take some profits when we reach the upper zone, which is the 817. So, you know, if we reach 817, I'm going to at least take half off, because I haven't done so yet. I haven't taken any profits here. So, you know, this looks like a good zone to me. What else do we have on the table? USD-MXN, what I was saying before, this is the one loss I had to take, which actually hurt somewhat, because I had drawn the descending wedge like this. So we got the breakout. I went long on the breakout. We got the move lower. It's okay. You often get that. You get a retest. But today that it penetrated through the lows, it triggered my stop loss. So that doesn't mean, you know, that was an attempt. I mean, you know, you always know that catching a falling knife is something that can trigger your stop loss. It's not a high probability trade, but it's a high reward to risk trade. But, you know, there is still the potential for a wedge to be here. Just a different wedge. So I'm going to still monitor. If I see, let's say, a reversal from down here or at a retest of the wedge, I will actually get long once again, because, you know, you need to be persistent with this. And, you know, I'm very lucky to have had a couple of very good months in trading, and, you know, I can definitely afford some losses when I see that there are setups there that are appealing. And now, having to do with the reversals, I'm still obviously short the pound yen, and quite happy about it. I think that, as I said before to Dale, this move here should at least come in two waves. I said yesterday as well that 144.70 is my first target. 144.50 is the 61.8 it was. If we reverse this, we'll see that it's going to be 38.2 roughly. So let's have a look at it. Yeah, it's a little bit lower actually. So 144.70, I'm going to be taking half profits here, and, you know, then it's a free ride. We might get all the way down here. This is one scenario. Okay, that's going to be awesome. It will also probably coincide with the 61.8. So, you know, that's going to be a great trade if it happens like this. But at the very, very, very minimum, what I would expect here is something like this. I mean, that's my minimum target here. The very minimum correction I would expect. So, you know, this is the shallow retracement scenario, and this is like the deeper retracement scenario to retest the 61.8 and this ascending trend line. So, you know, once you get a good entry, the benefit is that you can stick with it and either take very little profits at the end or take very good profits in the end. You know, and, you know, this is a game you always want to play. I mean, when you get the ability to time it right. Of course, it's not going to happen always, as it didn't happen in the USD-MXN, as it didn't happen the first two times we tried it here with the Nasdaq, but it happened the third. And speaking of the Nasdaq, because I wanted to show this is very important. I'm bullish on Nasdaq, and I'm bullish on Nasdaq. We forgot to mention it yesterday completely, and the reason is the following. We had discussed back then with Dale what is the target, and I told him, listen, at the very minimum we expect an ABC. Where did we bottom? We actually bottomed at almost the perfect equality of the A, B, C. I mean, the perfect equality target was 55.84. We went down to 55.50 little. So, you know, it's like a very small difference. And what did we get then? We got a rejection. And what do I see here? I see a perfect correction. it doesn't, it doesn't matter if fundamentally I think that the markets are extremely overbought here. And in retrospect, looking at these levels in a few months from now or a year from now or whatever, we will be laughing with them, as we did with the markets that we had in 1999, as we did with the market we had at 2007, 2008. It doesn't matter, because that doesn't mean that they cannot bring more highs. And honestly, why would I be bearish the Nasdaq at the moment? I saw the correction I was looking for. The market steamed off. The correction was orderly. It was in a three-wave, and it had almost a perfect equality target. So why would I be short at the moment? Does this look like an impulsive move lower? No, no chance in a million. Okay. Thoughts on USD CAD? Sure. By the way, this was a monologue, to take you over what I have from positions. So I'm now going to be looking at the questions again. USD CAD. I'm short the USD NOK, as I said. I'm short since a long time ago. We said it here live on the webinar, like a few hours after I took that short. Obviously, if I believed that USD CAD is a long, I wouldn't remain USD NOK short. They're very highly correlated with each other. We said it yesterday as well. What do we see with USD CAD? We see an impulsive move higher after a very long time, because all this choppy price action was obviously corrective, and finally we see an impulsive price action. And which side is it? To the downside. Will it move in a straight line to 120? No, it won't. Does that mean that we should try to be long the USD CAD, trying to time it? No, because I don't see a complete impulsive move lower. I see a 1, 2, then an extended probably third wave, which is 1, 2, 3, a fourth and a fifth, then a bigger fourth and then a fifth, which means that I believe that there is a lot of downside most probably left, and as long as we remain below 130, there is absolutely no technical figure to even get you to consider the long side. So I said it yesterday as well. In my opinion, if you want to do something with USD CAD, wait for a rebound and short it. Don't try to be long. The structure, the downside structure, is not yet complete. Okay, and this will also coincide very well with the WTI analysis that a friend of mine is asking for here. It's Conrad, actually, and I have a little surprise for you. All of you, I mean. Actually, Greg wanted to be here today because he wanted to share some stuff with you, but he couldn't make it. So what he did was he made a midweek Elliott wave update, free for all, which I am going to publish on YouTube the moment we go offline, the webinar. And I'm gonna actually give you the link so you can see it. It's an 8-minute update from an Elliott wave perspective that he's talking. One of the things he's talking about is oil. We had said here with Dale as well that I expected. Dale, are you here, by the way?
Yes. Hi, Steve. How are you?
You remember? I'm very good. How have you been? You remember how many times I said, do not go short the first signs of weakness you're going to see in crude? Do you remember that?
Yes, I did. So you got your B-wave pullback.
I said it plenty of times.
Yeah. You're the best.
I said it plenty of times. For people that are listening in, I told you, when you see a pullback in this move in oil, do not short it. Do not short it. That's going to be the first move lower, is going to be a bear trap. And that's how it looks like. Yesterday, I also uploaded on ForexAnalytix. That's why it's a great benefit if you are a subscriber, because, we talk about a lot of things and we happily share a lot of things here. But, the webinar is at a specific 1 hour per day. I'm saying 1 hour because the last 30 minutes is an interview with somebody. So we're not looking at the markets together. So we're looking at the markets 1 hour together here. But, things can happen other hours as well. So yesterday, what we saw in the USD, in the US oil, in crude, and I'm going to bring it here, and I posted that on ForexAnalytix, was actually this, which gave me more conviction. This is crude oil. What did we get? We got a confluence, a great confluence. We got the 61.8. We got an A, B, C that was perfect at 43.72. And then what did we get? An inverted head and shoulders that provided a minimum target of 45.70. So we posted this, and for us, since we were anyhow looking for a move higher, for another move higher in crude, when you get a triple confluence at more or less where you would expect it to come, you know, that's a verification that you're going higher.
And the first high, Steve, fell quite short of Nicola Duke's harmonic target.
Yes.
I believe she's looking for 50.
Correct. That's absolutely correct. So that's what we saw on the 4-hour chart as well yesterday. And, you know, that increased our conviction that this market is most likely is going to register a fresh high above this one in all likelihood. And to be fair, we had said plenty of times that that's what we expected, even when we were seeing weakness. My target remains, my initial target remains here, the 61.8 of this move, so at 48.17. Nicola is aiming higher. Greg, I think, is aiming even higher. You know, I'm fine. If I get 48, you know, I'm happy. And if I see a rejection from here, personally, I'm gonna tend to trust it. And you know something, if we even want to do some forward-looking analysis here, let's assume now for a second that this is a confirmation that we're going to get at least an ABC. So where would we expect, now that we know where the low is, where would we expect to have a target and a quality target? And the answer is, let me remove everything else from here so we don't actually get confused, and I'm also going to change the color of this to something, I don't know, to a yellow, let's say, this one. No, yellow obviously was a stupidest choice. It's almost not visible. This green, okay, good. 48.89, which also coincides with this zone I have. So for example, we have some upside targets which are between 48.17, my personal targets, and 48.89. So if I see crude making it up there and showing some weakness, there is even a chance I'm going to actually short it. But until then, because I won't forget where the conversation started from, until then, especially until then, why would I want to be long USD CAD than long USD NOK and not the opposite? Okay. So I mean, this bodes well with my outlook for USD CAD and USD NOK. Euro USD, Kiwi, sure, let's have a look at those. Okay, with Euro USD, this is going to be a very fast outlook. The reason is that almost nothing has changed since yesterday. Yes, we do see some weakness here, and it's nice. It's nice because it comes from this zone. So obviously, it all goes back to the scenario we had drawn plenty of days ago when we were actually testing these highs again, which was what? We either see a clean break above 114.50, which is the zone, it's the average level of the zone, but the zone, as you see, is broader. So we either saw a clean break above it, and then I would happily buy a retest, or we get a rejection from the zone lower, which we can then consider buying from lower levels to then see a penetration higher. Obviously, today's candle, being early in the day as well, is not enough to say, okay, this is it, that's the high, let's go short it. But I can tell you as a fact that for the time being, the candlestick we're seeing on the daily is a dark cloud cover. And in combination with being on an important zone and the bullish sentiment that we see in Euro at the moment, I would say that this is a signal that no, you probably would not want to be long at current levels, because, you know, it's a very high risk trade trying to be long here just because you saw a small pullback. Because now we get a confluence of events that tells us, okay, perhaps this scenario, now let's move it forward in time a little bit, that perhaps this scenario is going to play out.
You know, but Steve, we also talked about maybe one more high up in Euro Pound, and it's reversing pretty good there, and the daily looks
You're right about it,
negative.
but I'm a little bit. You're right about it, but I'm a little bit skeptical about it, and I'll show you why.
Okay.
Actually, now we penetrated below it. Before, when I was looking at it,
I think like
it had
possible.
Yes, it had penetrated above the wedge, but it was retesting the wedge. So I was skeptical. Why? Because if we saw something like this, you know, it might even have been bullish.
Yeah.
But if we actually close, especially below this 88.60 zone, this is obviously an overthrow of the wedge, and then we can be looking at such a scenario here. So I agree with you, Dale. I mean, this looks you know, to be a false break at the moment. We need more confirmation, but it looks likely if we close lower that this was just an what we call an overthrow. Okay. So let's see how the rest of the day moves.
Yeah.
Now, having to do, since we're talking about the euro, needless to say that this euro-yen move is serious. I mean, we've already engulfed within half a day the last 3 bullish candles we saw. And as you remember, I kept saying, you guys asked me yesterday once again, what do I think about euro yen? And I said, listen, okay, it got a little overthrow from our ideal target, which was 130.25, but those are indicative targets. I mean, I'm not quitting my bearish thesis simply because we got a little bit of an overthrow. And even if I did, even if we see, you know, prices moving even higher from here, how could I advise anybody to be long up here? It's, you know, it was madness. That's what I said yesterday. And you see what happens today. This is obviously a huge reversal. That at the very, very minimum, if not bringing a retest of 125.70, which is the first very serious zone that we see, at the very minimum, what you would expect to see is something like this.
Yeah. So you're not late, you know. I mean, you know, just started. That's the point.
Exactly.
Where you finesse yourself into the trade, you know, that's a little bit of an art form. But, you know, people think just because they didn't get short yesterday, they missed the move. They're wrong. Look at the low in April. No. You could have been a week. You could have been 2 weeks late, a month late, and made money on the long side.
Or simply speaking, even if we take only the last move of this, the last leg of this move, only the last 5-wave move that we got higher, which just got confirmed undeniably. I mean, this wave count was absolutely clean and absolutely correct. I mean, today's candle confirms that beyond any doubt, at least, you know, in my little head. Okay,
and you know, Steve, that, you know, it kind of builds a case for a correction, that it's only going to be a correction based on the RSI as well, because the RSI, it did confirm that high.
Yeah.
Those were new highs up there.
You're right.
So, you know, that could be a great,
even if you just take the last leg higher,
buying opportunity down there.
Yeah, exactly. So if you take the last leg higher, that was 900 pips. 900 pips. And if you also count this leg and saying, okay, that this was like, in essence, it was like a bullish move on itself, all of it, because the correction here was mostly a consolidation. If you take it from here, it took us from 115 below it, but let's call it roughly 115 to 131. Okay, that's 1600 pips. I mean, what would you expect a minimum correction of that to be? Like just
38,
100 and
something
minimum. Pips you see here. Yeah, I mean, you've not missed, you know, you haven't missed the boat yet. You know what I mean? Any decent pullback should at least bring you once more in some decent profit. Okay, at least these are the trading rules I follow. This is what I see, and in the vast majority of the cases, you know, from following the rules, you will make money, not lose. I mean, we've been together for several months. You see that I'm trying to follow specific rules, and in the vast majority of the cases, you know, they work out. But you need to stick to them, and you need to abide to them, and not do impulsive things. That's it. And you know, by you know, being with us, by being in ForexAnalytix, you know, our purpose is also training you to to learn to interpret and read the markets even better. You know, it's not about following our patterns in play, which you know, are doing great, but it's about teaching you how to make your own patterns in play. You know what I mean?
They're learning in here. I guarantee you. I could ask the question. You know, I think that we're earning and learning in here. Anyone agree with me? You know, the expression is we're either winning or learning. I think in FACE we're earning and learning at the same time. So that's a pretty powerful, you know, expression. Not saying that we're always right, but the hit rate's been pretty outstanding lately.
Zach is telling about the pound key.
Like the last year you've been in business, okay? The hit rates, everyone should take a look at it, in my opinion.
Yes, indeed. I mean, it tells everything. If you are a ForexAnalytix subscriber, you can find our statistics at the bottom of the close patterns in play. I think they tell the whole story.
Well, you're freebie, Steve. Maybe you show it to them.
No, I wouldn't want to, you know, because, you know, for reasons.
Be like bragging, yeah.
Yes, it is. Let's say they're excellent, and with $1 of a trial, they can find out immediately what they are.
Yeah.
But let's say that they are, you know, beyond any expectation.
Right.
So there are people that are. Zach, first of all, wanted to comment on the pound kiwi that he liked as a trade, but with the UK economic data, you know, changing and you know, the kiwi remaining bid that it might actually yield some profit on the downside. Yes, I totally agree. That's why I took it off. But on the other hand, I want to be honest. I'm not ready to be short those pairs. Euro Aussie, as Blake showed, indeed looks the weakest. And if I were to attempt a short, it would be there. I remind you that I'm already short the Euro CAD. So in essence, I already have a short exposure in a cross. And in a Euro cross I'm in. I might consider the Euro Aussie as well, but since I just, you know, I'm nimble enough to abandon a bullish thesis, but you know, I wouldn't be jumping immediately on the opposite side of the trade.
Euro Aussie? Yeah, it looks pretty bad. I mean, that looks like the C's coming to me, doesn't it? Euro Aussie?
Yeah, it does. We can have a look at.
You know, failing rally, you know, and when Blake was talking, I interrupted him. But you know what's interesting is Euro took out the high that Euro Aussie had a few weeks ago, and all you had was an ABC retrace in Euro Aussie. That was kind of a market message, don't you think?
Yes, and you know something, Dale, we've said it plenty of times. You get some very good indications of when you might see a move higher after a drop like this, for example.
Yeah.
There is no guarantee that the move you're going to get is impulsive. So, for example, if you followed this trade, you made money even if you were wrong that might take you new highs.
You rode that bounce.
Yeah.
Yeah.
Yeah. So, you know, what you can do is get the timing right, and then cross your fingers and hope that not only you're going to get a correction, but you're going to get an impulsive move in that direction, because then you can make even more money riding the same trade. But that doesn't happen always. And sometimes it doesn't happen at all, as we've...
Yeah. You know, failing rallies and higher lows, those kind of formations are kind of like money waves, okay? I kind of think that they're, you know, you've already topped or bottomed, and a failing rally, you have your reference point to be wrong, and you know, sometimes those waves are 1.618 of the first move. So you know, that to me is increased magnitude on the failing rally is a high potential rather than just equality, which most people would call equality, right? So
now, by the way, a friend here is asking for silver and gold. Let me remind everybody that we have on our blog post. It's for free on our blog. We have a post. The latest post is about gold and silver. They're still absolutely relevant, so you can read about them. We posted them a couple of days ago. We said before with Blake that we need to see gold taking out 1230. 1,230, and we need silver to establish on the ground above 1590, 16 before we can even consider a long bias once again. So, okay, we are seeing the potential of some reversals, but from a technical perspective, they're not mature enough yet. So I can tell you that, oh, okay, you know, I'm looking to be long. I was actually short silver. I took profits at 1550 at the flash crash, although we did reach it once again, and then once again we tested this level 3 times within 3 days. And we're showing some potential of a reversal. I mean, these are 3 interesting candles. The flash crash here, the hammer we got next day, the Marubozu closing black we got that day, which especially even if we completely ignore this week, let's call it the flash crash week, week, lower week. So let's say that this is, you know, BS price action because it happened within a few seconds. If we did that, these 3 candles would have been a nice morning star formation. I mean, this candle, and this candle would have been a nice morning star formation. And this is an initial indication that something might be changing with, you know, with this silver market. But I really want to see a close above this zone so I can then start getting interested in the upside again. So you should be careful if you're short, but you're still on the right side until it gets proven to be otherwise. Okay, that's my view in silver and gold. USD-MXN. Okay, we had a look at it before, but we can have a brief look at it again. What I said before is that, as it seems, the wedge was not the wedge we were looking at. Perhaps it's this wedge. So in this case, I would like to see a reversal from a test of this support. So obviously, the initial scenario we had with the wedge drawn differently, the wedge resistance drawn differently, failed because this was, you know, a very strong reaction. I mean, this is the 5th down day in a row and we broke to new lows, but I'm still monitoring this as a descending wedge. So I would probably look for lower levels, like let's see what it does at 1760, okay? And definitely until we break above this again, you know, it's very, very dangerous. I'm not being afraid to take another stab at it. I did it 3 times in the Nasdaq before I actually got, you know, a good profit out of it. And I might do it 2 or 3 times in USD-MXN. You know, as long as you know where your risk is and you're looking for a high reward, it's absolutely fine. But be careful because I don't see this being a big level. We've already breached these lows and these lows, and unless we completely reverse during this day to close higher, which then this is going to look like a stop hand and a false break lower, I would think that we will get a movement a little bit lower as well before even considering, you know, going higher.
Yeah, and if you get a pullback to that wedge line, Steve, and then I'm going to go to the interview, just like on rising wedges, where you could have throwovers, you could have a throw under that wedge. I've bought wedges like that and then seen it accelerate.
You're absolutely right. And by the way, since we're all here, let's put this to public. Let's publish it. And I'm putting on the chat the link so you can see. So you were lucky enough to get 1 hour of Blake and I going through the markets, and now you can get another 8 minutes of Grega showing you his point of view. I just posted the link to YouTube. I would suggest you go ahead and watch the interview first, and then you can watch this video from Grega. That's it, Dale. I think we covered, you know, a lot of markets. I think the markets, despite being July, as we have said, we see now some volatility. We see some interesting price action, and I think we might end up having an interesting summer. So, you know, that's good for us traders.
Yeah, don't go away until after Labor Day. You stay and then go away after Labor Day, and enjoy it when all the tourists are gone. Give me 1 minute, Steve, and great review. Blake was always, you know, on top of his game. And I'm going to be talking to Andrew Kreimer from Algonquin I just need 1 minute. Stand by, Andrew.
BOC, by the way, hike trades as expected by 25 base points. That was priced in the market. Let's see what kind of commentary follows this hike, because it's not about the hike, it's about forward guidance, because it's a completely different thing for the market to think that, okay, we expected a hike, we got a single hike and that's it, and the different thing for the market to get a hike that is expecting and then get some forward guidance. Okay, raises rates, as it says, softer inflation appears mostly from temporary factors. Okay, so they're even shooting down the possibility that soft inflation, they more or less photograph it as transitory, and that's hawkish as a statement. And this is what's most probably is creating the push lower that you see in the USD CAD, because in essence, this shows
You just got the Bank of Canada.
More likely. Yes, that's what I'm explaining, because it shows, I was just saying, Dale, that the fact that the BOC recognizes that the soft inflation is temporary, it's transitory, that's a hawkish statement. Because, they could have just said we are hiking 25 base points and, we are monitoring closely inflation because we wouldn't want to see it, let's say, remain soft for much longer. But on the contrary, they're saying that they're more or less certain that this is transitory. And I think that this can actually bring the move that I was expecting to 128, because as you remember, I said it yesterday, I really find it difficult that this 128 level is not going to be tested. And that was my main scenario, and that was my secondary scenario. My main scenario is a 128 before getting some kind of a pullback. So we might get to see this now. Yeah,
nice call, Steve. Nice review. Okay. I think everyone knows everything right now, I believe. Everyone know everything on it. Does everyone know what to do on about 100 instruments now? Okay. Makes my head.
Okay, Dale, enjoy the interview, my friend.
All right, buddy. Okay, Andrew, I'm making you a presenter. Looking forward to hearing your voice and seeing your screen. Welcome to FACE. Hi, Andrew.
Hi, can you hear me?
Yes. How are you, buddy?
Awesome. Fine, thanks. How are you? It's been a while since last time we spoke.
Yeah, a couple of years ago. So why don't you refresh my memory too, and the communities, and tell us a little bit about how you got started in the business, what your journey was like. Everyone has a different road, the road less traveled. How did you get involved in the business?
Yeah, sure. So my journey begins, almost 5 years ago. I just started trading and got interested in the FX market. And then during my studies towards a bachelor's degree, I got, I did a lot of programming and stuff. And eventually I realized that data mining and applications of data mining are extremely vital in trading. So it's supposed to be automated, and it's supposed to be based on some data mining and sophisticated analysis of price data and historical data. And currently I studied with a master's degree in computer science, then again I still deal with this, and for the past 4 years I have been working in the Israeli high-tech industry, from software engineer to a data scientist, and for the past couple of months I actually run a small business with a couple of friends of mine. We are basically trying to deliver people trading ideas in a simple, actionable, and unified way, because the markets are extremely large. There is too much data, too many assets to trade. In the US market we have more than 10,000 assets, and it's very sophisticated, very difficult to find good assets to trade in. So we basically do the heavy lifting. We provide machine learning solutions for the retail investor. We do the data mining and historical price analysis, and eventually find assets that you could invest in.
So are you a believer that concentration of positions is better than being all over the place, being, you know, kind of like being a master of one instead of a jack of all trades? That's a pun.
No, we actually believe in diversification, but not to diversify very wide. But we think that each and every day there are at least 50 assets that you could trade. So if we think about the U.S. market, yeah. So if you have around 8,000 to 10,000 assets, 50 possible trades a day, this is what we are looking for. So less is more.
So
but, you know,
out of that 50, how many are FX related?
Well, in the FX, it's way easier because, well, we have no more than 50
right.
pairs. And
so you were talking about equities and ETFs.
Yeah.
Okay.
Yeah, we analyze all of NASDAQ symbols, which means Amex NICE, NASDAQ, and ETFs, and we also provide trading signals for FX. But we actually think that the opportunity, the higher possible opportunity and lower risks are within equities. So we are now more into equities, and we trade with our own money, not much, around 100,000. But so far it was okay, and we basically, once again, do the machine learning and just provide you some trading ideas.
Okay, so what's on the radar screen? Or would you like to share some ideas that you're considering?
Yeah, so actually I could show you a sample of our product. We basically provide a couple of sections. We deliver those ideas by emails. And usually we divide it to a couple of sections. Long-term investment signals is something that we actually invested in almost fully. And those are assets that we believe were performing tremendously for the past couple of years. And based on our statistical and machine learning analysis, we believe they're going to go up. So this is how we provide.
Do you have an upside target for Amazon?
No,
not really.
Looks like
that's your strongest performer that you have.
Yeah, so we divide it to strength and slope. Slope is basically how fast the company is growing, and, well, strength of the signal. So as long as you see the assets in this list, well, we think that you should be invested in. But once again, those are just our opinion, and we are actually invested in those assets. Then we go with something more riskier, more for the day trader, or, you know, like hold it for a week. Basically here you can see some assets and the underlying probabilities for those assets to go up or down. So basically those are bullish signals, and the red ones are bearish signals. And,
and this is off your proprietary algo that gives you these readouts.
Yeah, exactly. And
so
then
with your background in college, you naturally drifted towards coding and writing algorithms.
Yeah, of course. I currently studied towards a master's degree. I published 2 papers on the field of applications of data mining in financial markets. One is a new classification algorithm in Bayesian network analysis, and the second one is about this methodology that actually allows us to find assets that we should invest in. And so then we show some
Is there any discretion, or do you do everything that the machine spits out?
No, it's fully automated. It runs daily, and it takes almost a day to run. When markets close and we have the most up-to-date data, you know, like the adjusted close prices and stuff, we just run our algorithms, and tomorrow we have new ideas and we just deliver them.
Okay. All right, because I was wondering, it seemed like you had an education section at the top of your website, and I'm curious how you educate people when it's an automated type of product. What is there to educate besides having people click the link of what you're recommending?
Yeah, but
the education link up there.
Yeah, so we basically try to share some wealth with the retail investor, because the tools are out there, the data is out there, we use professional data from Quandl, but you can get some data from Yahoo Finance or even Quandl, the free database. And you can use Python or you can use Excel, and you can, well, you know, you can do 90% of the things that we actually do by yourself. The problem is that, well, people don't usually have time, or, you know, yeah, so basically we're trying to provide some knowledge, you know, like if I gave a talk at Local Pi Data about introduction to algorithmic trading, you could check this one out and learn by yourself how to actually use Python, get some historical data, analyze it, apply some machine learning. This is our toolbox, you know, like this is all open source. Nothing fancy here, nothing proprietary. We use open source software which is available to all, and we are always we're always eager to help investors and more advanced traders to get into quantitative finance, because this is the way to trade, we think.
Yes, it's nice that you have open source materials. So if someone, this is best for people that have psychology issues with trading, don't you think? It takes all the emotion out of it.
Of course,
okay.
Definitely.
And are there ways to set a risk parameter on all your signals so that you know you have, you know, what's important to me is what's your worst drawdown?
Yeah, so historically we had no more than 10% drawdown on single asset, and once combined we had no more than 5%. And about the risk analysis, we actually, this stuff that I wanted to share with you, how we actually assess risks. So suppose we have some trading ideas, right? So you're a trader, you're using some proprietary trading ideas, or you are using our product, and suppose you have some assets that you are willing to trade. So we actually do a couple of investigations to try to find assets with bad reputations. This is what we call it. So we start with options chain. We believe that assets that have a good options chain, well, they are assets that you should trade. For instance, Amazon, you see that, well, it's very liquid, right? There is nothing to explain here. You have a lot of strikes above, below, a lot of periods. This is cool stuff. So we begin by just volume, analyzing.
You look for volume on the strikes as well as open interest?
Yeah.
Okay.
Mainly strike prices to see if, you know, it's not very tight.
Do you get any hints? Do you get any hints on direction by option activity, like a lot of paper coming into one strike? Unusual amount jump in volume on a particular option tell you anything?
No. Just the bids and asks, just to see that the order book is not dry. This is our main idea here. I'm not. Some of our customers use options to actually enter, so it's very important to them. Others just use stocks, cash, etc. But for us, it's important to see that the order book is not dry. So we begin by just analyzing to see if we have some strike prices within the current traded price, within some, you know, like logical price. Then we continue with model portfolio theory and analysis. So the mean variance optimization and the efficient frontier by Harry Markowitz is, well, we are retail traders. We do not have actually a lot of funds like the big institutions, so it's not very relevant to us. But on the other hand, we can see that, well, sometimes it's very easy to just get an understanding about your portfolio. So suppose I'm willing to trade those assets, and this is not very important what are the assets, but I can see that the mean variance optimization, the combinations of multiple portfolios, is positive, right? So any combination of those assets is good. On the other hand, and well, those are just bearish signals, so we actually are looking for them to go down. So you can see that the combination is going down.
So the algorithm plots these dots, and the more concentrated, what tells you what's bullish is because it's going from left to right upwards, and what tells you that it's bearish?
Exactly.
Okay.
Exactly. So
all right.
those are just combinations of portfolio, and portfolio here could be 100 stocks of asset A and 100 of asset B. But then it could be combined in a different way. Say 90 stocks of asset A and then 110 of asset B. So all of those combinations eventually are historically we're performing like this. So this is the mean performance and then the standard deviation, which is risk. And if this stuff goes up, so we know we have a good indication. And then if you add actually the efficient frontier, which is just a tangent line for the optimal portfolio, you could once again see that those signals are good, well, historically, and we know that history is not, you know, like mandatory to repeat itself.
To repeat, yeah, it rhymes.
Yeah, but this is a simple indication. The another aspect is just cumulative returns. So we think that assets that historically were performing good, well, maybe they will
continue or regress to the mean.
Yeah, but well, so here you can see our long-term investment signals. You can see that for the past 3 years, those assets were performing very good. Yeah, you can see assets here that made more than 100% return on capital.
Yeah,
and
I want to be in the red. I want to be in the red one, Andrew.
Yeah, who doesn't? I believe it's Amazon. I believe it's Amazon. Yeah, so, but
right.
you know, like, it's not about finding this one. It's about finding a combination of those guys that, well, even if one of them falls, you're good because you're diversifying. You have more of those good assets in your portfolio. Eventually, you will end up somewhere here, okay?
Right.
And this is another example. You can see that
you're happy with the middle. You're happy with the middle.
Yeah,
being
something
in the middle.
positive. Yeah.
So do you think people have a lot of unrealistic expectations about yearly returns, and are you like most hedge fund managers that are very happy and pleased and do cartwheels at 25% annum?
Sure, but we think that on each and every investment it is possible to make some returns. It's very important to actually take your stop loss and take profit levels very seriously, because, well, once again, this is about emotions and stuff, and sometimes we know, like, want to hold this stop loss longer. But if you actually stick to the rules and you won't allow more than 10% loss on each and every asset, the average, the mean of the returns is always possible.
Did you ever, have you ever put a CIC at the end of your stop loss order? I know I have. You know what it stands for? Cancel if close. Cancel if close. You know, people get it's close to their stop and they go, well, I'll give it a little more breathing room. So you have the discipline once you place a stop to keep it in there. How about once you start having returns? Does what you do trail a stop to lock in profits? Do you sell partial positions? How do you manage your positions?
Yeah, so usually we just divide it evenly for the capital we have. So suppose I have 50 trading signals and I have a 50K account. So I just will give each and every asset the 1,000. So it's very important not to give any asset more priority, because eventually and statistically, even if some of them fail, like go down to your stop loss, eventually you will be okay if the risk on each and every asset is the same. And sometimes if we have less cash, or you know, like sometimes you have assets that cost more than, say, say you decided to put 500 bucks on some asset, and well, Amazon is way above, right? So in this scenario, we won't invest in it because it breaks the rule of equal risk allocations for each and every asset.
Okay. Any leverage, like margin debt, or it's all cash?
Usually it's with margin, of course.
Okay. All right.
But sometimes we use our signals to just make some bull spreads and stuff like that. It depends. It depends on the option book and stuff, stuff like that.
I find it interesting. You look at the option book is a big part of your work. Okay, go ahead. I'm sorry.
Yeah. So another aspect of risk assessment, returns per day. So this is a plot of some trading ideas and trading assets and how they were performing daily. So we see that in this combination, sometimes it's very risky because, well, it's the mean here is probably around 5%. So 5% movement a day, it's, well, we think it's risky, but it could be actually used. But if you take a look here, so it seems like the mean here is lower. So it's between 20% and 10, it's even lower than 5. So this is another aspect. And eventually, after the mean variance optimization and the efficient frontier, another aspect is just the cumulative returns and max drawdown. So we believe, once again, it's all about bad reputation. So we believe that if a company in the past 3 years lost more than 50%, well, for us, it's like we definitely won't trade it. Once again, this is not an indication. This is not an, you know, like, but once again, we think it's bad reputation. So if I'm looking for an, let's say, bullish signal, and for instance, I have a company that EHTH, right? So for the past 3 years, and this is a bullish signal. So so this company lost more than
94.6%. Wow.
Yeah, this is the max drawdown, and you know, like this. Yeah. This is this asset is for us.
That's like an option.
Yeah. So.
You know what I say about options, right?
No.
Options are like relationships. 90% of them expire worthless. But that's kind of a cynical view. But yeah. You've never heard that one before, huh? Okay.
No. So this is another aspect. But if we are looking on a company that, well, for the past 3 years had a drawdown then around 26%, and we can see that the cumulative returns are going okay, and the standard deviation is pretty low. So this is a simple evaluation of, you know, before even trying to locate this asset and see how it looks, I just know that this asset I'm gonna, well, definitely consider, and the one before I'm like, well, another aspect is value at risk. I think, well, it was it's been used by, well, most of the industry, but I think it's very simple and very easy way to actually assess risk for your investment. How actually, how much money can you lose on your single allocation for an asset? And we can see that, well, those assets are peaking here. So the potential here is 15% to lose on single investment. This is very high. On the other hand, those assets are bounded by 6-7%. This is okay. So another indication, those guys for me have a bad reputation. I'm not going to trade them. Same goes for this one, EHTH. Yeah, it's the one we have seen before. And this one, PNK. Okay, so assets that have CVAR and VAR of more than 7%, it's risky. And this is pretty. Another aspect we sometimes incorporate, but actually I have an error here, is just rolling alpha and beta. So another aspect is just to see how volatile are you, and well, on average, how much money you are able to make with this combination of stocks or with these assets.
So are you, do you manage money? Are you a registered investment advisor or?
No, we
no?
trade with our own money. We are not registered.
Okay.
We just provide the data. We provided ideas.
Okay, so your main business model is you're selling a subscription to your algo work.
Yeah. So we provide monthly subscriptions. We have for stocks, and we have for FX. In FX, we think it's more sophisticated and efficient to just subscribe to the trading signals via MetaTrader. For equities, it's just a monthly subscription, and you get each and every day and each and every week an email that looks like this, and you can see here the assets, you can see here the trading ideas, and well, usually it's up to you to execute, of course. We are not,
right. Like we're all captains of our own ship.
Yeah, but those are just trading ideas based on machine learning and some data analysis.
Okay, well, Andrew, it was a pleasure speaking to you today. I want to thank you for taking time out of your day and away from your assets to address us all. I think that it's something that people that are struggling with their the emotional aspects of their trading, something automated may help them overcome something that, maybe for years they've been trying to in using discretionary trading. So I really appreciate you coming here today. Thank you, Andrew. I made the pips rain down on you and your partner and your 100K account. Next year, I hope it's 2. And if people are interested, they could follow you at Al Ganel, and that's also the name of your website.
Yeah, it's the name of our website. We are very active on Twitter, stock tweets, Facebook, LinkedIn, and well, thank you very much, Dale. Thank you.
You're very welcome, Andrew.
Thank you. Have a great day.
Good hunting, my friend. Adios.
Thank you. Adios,
okay,
bye.
Face. So that's it. Thank you, everyone, for hanging out with us, and I'll see you tomorrow. Remember, and I know a lot of people collected some pips today, but don't just count them, count your blessings, and with the rest, become a 1-year subscriber at ForexAnalytix. As Steve said, you're very welcome. Hi, BW, how are you? That we cover a lot of instruments during our free webinar, but the markets aren't closed just because I'm signing off here. So many things can happen between when we end here and when we open tomorrow. So the best way to have the edge is to be informed by the best crew on the street, in my humble opinion. So adios, everyone. See you tomorrow. Enjoy your summer day.